What is the transition phase today on Elevate Wealth? You've stopped working, but you haven't started your Social Security or your required minimum distributions yet. What's that phase? That's what we call the transition phase. Hey there, I'm Deanne Rosso, and today on Elevate Wealth, we're going to talk transition. I'm joined again by our Director of Operations and Wealth Advisor, Brian Rosso. Hey, Brian.
Hey, Deanne.
So, Brian, what is this transition stage and why is it so important?
Yeah, I mean, the transition stage is really the cornerstone of what we call spin down. It has a lot of opportunity there, and it starts when you receive your last paycheck all the way to your required minimum distribution age 73 or 75. And again, that's dependent on your date of birth. It's a critical window of opportunity. The transition phase, as you mentioned, you're not required to take your Social Security yet, your pension, or even your required minimum distributions. And that really opens the door for a lot of powerful strategies.
So tell me a little bit about what are some of those strategies?
Yeah, I mean, there's a lot we could talk about, but I really want to focus on three main points.
Okay.
And the first just being strategic tax planning. And during this stage, sometimes we can voluntarily pay taxes.
Why would I want to voluntarily pay tax?
Right, and that's the natural question. But really what we're trying to do is reduce your overall lifetime tax burden.
Yes.
It's not necessarily about paying the least amount of taxes today or tomorrow, but how can we reduce your overall taxes over your lifetime?
Gotcha. Okay, makes sense. What's next?
So the second stage is Roth conversions. And this has a lot of benefits of doing this in the transition period. And what a Roth conversion is converting your tax-deferred assets into things like a Roth IRA.
Right. So taking those assets that you are going to owe tax on and going ahead and volunteering to pay tax and getting them into something where we're not going to pay tax ever again.
That's right.
Okay.
And you really have an opportunity in the transition period to pay lower taxes versus when you're in your accumulation phase or in that distribution phase that we just covered.
Right, because you haven't taken your Social Security yet, or perhaps your pension or your annuity, so you get to choose where that income comes from.
Right.
Okay.
There's also a few extra benefits of doing Roth conversions during this period. So by doing Roth conversions in the transition period, that's actually going to lower your RMDs when you do meet and get to that distribution period.
That makes sense. Okay.
The other thing that Roth conversions can do during transition is once you've paid tax on that, once you've converted that money to Roth IRAs, then you get tax-free growth for the future.
Wow. Tax-free growth and income forevermore.
That's right.
That's awesome. And then lastly, what do you want to focus on in transition?
Yeah, the third key point I wanted to mention was just benefit timing. Because we're not required to take our distributions or to take Social Security, there's a lot of planning between families, spouses, and survivor benefits that goes into that. And the transition period is a great time to think about those.
Yeah, it is. I think, again, you get to kind of choose when you pull which lever in order to make it the most tax efficient over your lifetime, right?
Yeah, I mean, this is a very brief period, but if you make the right moves during this, it can really shape the rest of your retirement.
Yeah, I agree. So thank you, Brian, for joining me today. And the transition phase is just, in our office, we think it's one of the most important phases that you'll face during your retirement income journey. And if we can help with that, visit us at elevate-wealth.com and click Let's Talk. Thanks so much for joining. And on our next video, we'll talk about the first phase of the retirement journey, accumulation. We hope you join us then.